Here's the truth nobody's talking about. While millions of Americans are focused on their January Social Security payments, there's something far more important happening at the end of this month that could affect your benefits for the entire year. Right now, we're in the middle of a critical window that directly impacts how much money you'll see in your account. The Social Security Administration just rolled out the 2.8% cost of living adjustment, which means the average retirement benefit jumped from $2,015 to $2,071 per month. But here's what most seniors don't realize. If you haven't checked your My Social Security account by the end of January, you could be missing crucial information about your new benefit amount, Medicare premium deductions, and whether your direct deposit information is current. And if you're one of the 7.5 million SSI recipients, your payment schedule has already shifted. The timing matters because February brings new Medicare Part B premiums that jump to $290, eating into that COLA increase. Plus, the SSA is mailing COLA notices throughout January, and thousands of seniors never receive theirs due to outdated addresses. This isn't about panic, it's about making sure you're getting every dollar you've earned. Let me show you exactly what you need to verify before January ends. Let me be completely honest with you about what's happening right now with your Social Security benefits, because this is information that could literally mean the difference between maximizing your income and leaving money on the table. You see, the Social Security Administration operates on a very specific timeline, and we're right in the middle of one of the most critical periods of the entire year. While most people are just getting back into their routines after the holidays, there are several time-sensitive matters that demand your attention before the end of this month, and I'm going to walk you through each one of them so you know exactly what to do. First, let's talk about what actually changed on January 1st of this year. The cost of living adjustment went into effect, and for 2025, that adjustment is 2.8%. Now, I know some folks were hoping for a bigger increase, especially after we saw 3.2% last year and those much larger adjustments in 2022 and 2023. But here's what that 2.8% actually means for your wallet. If you were receiving the average retirement benefit of about $2,015 per month in December, your January payment increased to approximately $2,071. That's an extra $56 per month, which works out to $672 more per year. And if you're receiving the maximum benefit because you had high earnings throughout your career and delayed claiming until age 70, your monthly check went from around $4,018 up to about $4,130. That's an additional $113 every single month. But here's where things get tricky, and this is what so many people don't understand until it's too late. That cost of living adjustment doesn't exist in a vacuum. At the exact same time your benefit increased, Medicare Part B premiums also went up. The standard Part B premium jumped from $185 per month in 2024 to $290 per month in 2025. That's an increase of $17.90 per month. So if you're doing the math in your head, you're realizing that out of that $56 monthly increase from the COLA, you're immediately losing almost $18 to higher Medicare premiums. Your actual net increase is closer to $38 per month, not $56. And this is exactly why it's so crucial to check your actual benefit amount right now, because you need to know what you're really taking home after all the deductions. Now here's something that catches thousands of seniors off guard every single January. The Social Security Administration is required by law to send you a notice about your new benefit amount, and they mail these notices out throughout the month of January. But here's the problem that nobody talks about. If your address isn't current in their system, you're not going to receive that notice. And without that notice, you won't have official documentation of your new benefit amount, your Medicare premium deduction, or any other adjustments that might have been made to your payment. This becomes a real problem if you need to verify your income for housing assistance, Medicaid, food stamps, or any other benefit program. It also matters if you're doing your taxes and need to know exactly how much Social Security income you received during the year. This is why I'm urging everyone watching this to log into your My Social Security account before the end of January if you haven't already done so. When you log in, you can see your current benefit amount, view your payment history, check what's being deducted for Medicare premiums and any other withholdings, and verify that your direct deposit information is correct. You can also download your benefit verification letter, which serves as official proof of your Social Security income. This letter is incredibly important because banks, landlords, government agencies, and many other organizations require it as documentation. If you wait until you actually need this letter and then try to get it, you might find yourself in a time crunch, especially if you're trying to access it during a busy period when the Social Security Administration systems are overloaded. Speaking of payment schedules, let's talk about when you actually receive your money, because this is another area where confusion runs rampant. If you started receiving Social Security benefits before May 1997, you get your payment on the third day of every month, regardless of when your birthday falls. So your January payment arrived on January 3rd, your February payment will arrive on February 3rd, and so on. But if you started receiving benefits in May 1997 or later, your payment date is based on your birth date. If you were born between the 1st and the 10th of the month, you receive your payment on the second Wednesday. If you were born between the 11th and the 20th, your payment comes on the third Wednesday. And if you were born between the 21st and the 31st, your payment arrives on the fourth Wednesday. This staggered schedule was implemented to spread out the workload for the Social Security Administration and to help ensure smoother processing of millions of payments every single month. But here's where January 31st becomes particularly relevant for some recipients. If you're receiving supplemental security income, which is a needs-based program that's different from regular Social Security retirement or disability benefits, your payment schedule works differently. SSI payments are supposed to arrive on the first day of the month, but when the first falls on a weekend or holiday, the payment comes early. This means that SSI recipients actually received their January payment in late December, and they'll receive their February payment on January 31st because February 1st falls on a Saturday. This can create real budgeting challenges if you're not aware of it, because you might find yourself with 2 SSI payments in January and then none in early February. Let me shift gears for a moment and talk about something that affects anyone who's still working while receiving Social Security benefits, because this is another critical issue that comes into play at the beginning of every year. If you're under your full retirement age, which is 67 for anyone born in 1960 or later, and you're still working, there's an earnings limit that applies to you. For 2025, if you won't reach full retirement age this year, you can earn up to $23,400 without having any of your Social Security benefits withheld. But for every $2 you earn above that limit, Social Security will withhold $1 of your benefits. Now, if you will reach full retirement age in 2025, there's a different, higher limit that applies, and it only counts earnings before the month you reach full retirement age. For those individuals, the limit is $62,160, and for every $3 above that limit, $1 gets withheld. Here's why this matters right now, at the end of January. If you worked last year and you exceeded the earnings limit, Social Security might start withholding benefits from your monthly payments this year to account for that overpayment. Conversely, if you had benefits withheld last year, but you didn't actually exceed the earnings limit, you should be getting that money back. The Social Security Administration typically processes these adjustments in the early months of the year, which means January and February are when you might see unexpected changes to your benefit amount. This is yet another reason why you absolutely must be checking your My Social Security account regularly, because you need to know if your payment amount changes and why it changed. Now let's talk about taxes, because this is something that causes confusion for millions of Social Security recipients every single year. Your Social Security benefits might be taxable depending on your total income, and the threshold for this is something called your combined income. Your combined income is calculated by taking your adjusted gross income, adding any non-taxable interest you received, and then adding half of your Social Security benefits. If you're filing as an individual and your combined income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. If your combined income is more than $34,000, up to 85% of your benefits may be taxable. For married couples filing jointly, the thresholds are between $32,000 and $44,000 for the 50% level and above $44,000 for the 85% level. Why am I bringing this up at the end of January? Because if you want to have federal taxes withheld from your Social Security benefits, you need to complete Form W-4V and submit it to the Social Security Administration. You can choose to have 7, 12, 22, or 24% of your monthly benefit withheld for taxes. Many people prefer to do this rather than making quarterly estimated tax payments, because it's automatic, and you don't have to remember to send in payments 4 times a year. If you haven't set up tax withholding, and you think you're going to owe taxes on your Social Security benefits this year, getting this done now, before the end of January, means you'll have withholding in place for 11 months of the year, instead of scrambling to catch up later. There's another aspect of Social Security that becomes relevant right now, and that's the annual statement that used to be mailed to everyone automatically. Years ago, the Social Security Administration stopped mailing paper statements to most people in an effort to save money and encourage people to use their online accounts. Now, they only mail statements to workers age 60 and older who haven't set up an online account. If you're under 60 or if you have an online account, you need to access your statement electronically. That statement contains incredibly important information. It shows your earnings history, which determines how much your benefit will be. It provides estimates of your future retirement benefits at different claiming ages. And it shows whether you have enough work credits to qualify for benefits. Reviewing this statement carefully is essential, because if there are errors in your earnings history, you need to catch them and correct them. The best time to do this is well before you actually plan to claim benefits, because correcting errors can take time. Here's something else that many people don't realize. If you're married, divorced, or widowed, your spouse's earnings history might entitle you to a higher benefit than what you'd receive based on your own work record. Spousal benefits can be up to 50% of your spouse's full retirement age benefit amount. Divorced spousal benefits work similarly, as long as you were married for at least 10 years and you haven't remarried. Survivor benefits can be even more valuable, potentially allowing you to receive 100% of what your deceased spouse was receiving or entitled to receive. The rules around these benefits are complex, and the optimal claiming strategy often involves claiming one type of benefit first and then switching to another later. This is why it's so important to understand all of your options before you make any irreversible decisions. Let me address something that I see causing stress for people all the time, and that's direct deposit issues. The Social Security Administration strongly encourages everyone to use direct deposit because it's safer, faster, and more reliable than receiving paper checks. But problems can occur if your bank account information changes and you don't update it with Social Security. If you've switched banks, closed an account, or if your bank merged with another institution and your account number changed, you absolutely must notify the Social Security Administration immediately. If they try to deposit your payment into an account that no longer exists, your payment will be returned and there will be a delay while they issue you a paper check instead. This is another reason to check your My Social Security account right now, because you can verify that the direct deposit information on file is correct. If it's not, you can update it online or by calling the Social Security Administration, but don't wait until you miss a payment to discover there's a problem. Something else that deserves your attention right now is the annual recertification process for certain benefits and programs that work in conjunction with Social Security. If you receive assistance with Medicare premiums and co-pays through a Medicare savings program, or if you get help paying for prescription drugs through the Extra Help program, these benefits often require annual recertification. The exact timing varies by state and by program, but many of these recertifications happen in the first few months of the year. If you miss the deadline to recertify, you could lose benefits that are saving you hundreds or even thousands of dollars every year. Check with your state health insurance assistance program, also known as SHIP, to find out exactly when your recertification is due and what documentation you need to provide. I also want to address something that affects anyone who's thinking about claiming Social Security benefits soon or who claimed recently and is wondering if they made the right decision. You have a one-time opportunity to withdraw your application for benefits, but you must do it within 12 months of when you first became entitled to benefits, and you must repay all the money you've received so far, including any benefits paid to family members on your record. This is essentially a do-over that lets you restart as if you never claimed, which can be valuable if you claimed early and then realized you could have waited for a higher benefit. The 12-month window is strict though, so if you're within that window and you're reconsidering your claiming decision, you need to act now rather than letting time run out. For those of you who are already receiving benefits, there's also a provision that allows you to voluntarily suspend your benefits once you've reached full retirement age. This can be useful if you've started benefits, but then you return to work, or you realize you don't need the income right now. While your benefits are suspended, you earn delayed retirement credits, which increase your benefit by 8% for each year you delay, up until age 70. You can request a suspension online through your My Social Security account, and you can lift the suspension at any time. This is yet another tool that gives you flexibility in managing your Social Security income, but most people don't even know it exists. As we approach the end of January, I want to make sure you're thinking about the full picture of your retirement income, because Social Security is just one piece of the puzzle for most people. If you have retirement accounts like a 401k or an IRA, you need to be aware of required minimum distributions if you're over a certain age. The age for RMDs is now 73 for people who turned 72 in 2023 or later. If you don't take your required minimum distribution, the penalty is severe: 50% of the amount you should have withdrawn. These RMDs count as income, which can affect whether your Social Security benefits are taxable and how much you pay for Medicare premiums, so coordinating all of these different income sources requires careful planning. The end of January is a good time to meet with a financial advisor or tax professional to make sure you're handling everything correctly for the year ahead.